Hello everyone, and welcome to this week's Motor Trade Radio podcast. Powered by Motors, the driving force behind multi-site advertising. With Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters.
Well, Curtis, welcome back. I think you brought a bit of a cold back with you. I think that's the thing with getting on a plane and things like this.
Yeah, it's probably the downside of going on holiday this time of the year, because there are bugs flying around. And I caught one midway through the holiday. It didn't spoil my time on the beach, though. And you'll be pleased to know that I actually listened to the podcast on the flight home. So a big shout out to our good friend Carl Davis for co-hosting the show last week. It was a great way to listen to it, actually, because obviously it had 3 or 4 hours to spare. And it was quite a long show, but
it was a long one, yes.
Well, there was a lot of big stories there, and a lot of the big industry heavy hitters either retiring, like Darren Edwards, a friend of the pod, regular listener, or retiring. He's retiring or moving job, as was the case of Mark Raban. So lots going on.
Yeah. So like I say, it did fill that time. But no, huge thank you to Carl for stepping in again there and supporting with that co-hosting. And unlike you, Curtis, when I'm off in a week's time, mine's a little bit busier than yours in terms of, but we'll talk about that another time when I get back. But yeah, you've just had a week of, let's say, doing not a lot, should I say?
I was
enjoying
I was enjoying the sunshine on the beach, listening to lots of podcasts, including ours, of course.
Yes.
Other podcasts are available, and basically just chilling, swimming, and running.
Yeah. So so again, we'll talk more about what I've got coming up compared to what you did. But again, huge shout out, and Carl will hopefully be taking my place in a couple of weeks to support Curtis as co-hosting the podcast. I think Curtis you might keep the time a little bit more in control than I managed to do. But it was a great chat, and it always is. So thank you for that one. And we've got a couple of kind of updates as well as to what's been happening in the market before we get onto the headlines.
We have indeed, yeah. So a couple of shout outs for friends of the pod, starting with Karen Holston, who's everyone knows Karen. I mean, she's very active on social media. She's had a brilliant career in the automotive sector, and she took to LinkedIn last week to announce her new position, which is Business Development Manager for Autonomy at MTC. MTC are a website development company servicing businesses across different retail sectors, but she'll actually be driving its growth in automotive. And I can't think of a better person to do that. So, we both wish you well, Karen, and do let us know how you're getting on.
Yeah, and I know you've reached out to us, and a huge thank you for the continued support, Karen, because I know you're a huge supporter of what we do on the podcast. And again, echo what Kurt said, we love what you do, in that social space, and any company that you've been working for, you really do get their brand in the marketplace. So I'm sure we will see each other very soon at some kind of event or something. But look forward to seeing you soon. And something else, and Julian Stockton, again, a very, very good supporter of the podcast, who's sales director at the award-winning Angus McKinnon in New Toxeter, who's been in touch and announced that he'll be leaving after 7 years. I can't believe it's 7 years when we actually talked about him joining.
I know.
That's the more worrying thing, Angus. Julian, I said at the time, we were talking about how you'd moved into this role. It's 7 years ago. But obviously he's done a great job in terms of helping drive the sales and the profitability there. And he's going to be starting something a little bit different, but we don't know what yet, do we?
We don't know. He's been in touch with both of us. He's obviously very excited about what he will be doing, and he did say that he'll share more details in due course. And as you say, Julian's a big supporter of the podcast, and we do wish him well with whatever he unveils in 2025.
And talking about another big supporter of the podcast, just a bit of a so Ian Godbold, who we mentioned recently about his video about cost of sale, etc., that he was talking about. He gives a bit of a shout out on a follow up video to thank us for shouting out to Ian. We'll repay the favour yet again, Ian, and give you a shout out for mentioning us yet again. But I'm sure we will get you on the podcast again very soon and talk about what you've been doing, what you've been seeing and hearing across the section, some of this great work that you're doing to help retailers become more efficient in their advertising spend.
In the meantime, Phil, do you think we'll get a shout out from Ian for this shout out?
Well, yeah, we'll see how long we can keep this going.
Yeah.
And then just finally, mentioned it recently, we've got the Vehicle Remarketing Association annual seminar coming up down at Warwick University at the Slate there on the 27th of November. It's free to anybody that wishes to attend. We've got a capacity of up to 200 people at the event there. Some great speakers from the Bank of England with Graham Chaplin, who obviously very key timing for hearing what the Bank of England have got to say for the future for the economy. David Bailey, who many of us will know right across the automotive sector, who's an academic economist at Birmingham Business School. He'll be giving his view on the market, plus many other speakers from Cap HPI, Auto Trader, Tesla, Greenhouse, friend Danny Minshall at Greenhouse there, and various others. So it is something that if you haven't got it on your calendar to attend, then tickets and attendance is open. So please do register for that.
You're listening to the Motor Trade Radio podcast, powered by Motors.
Headlines this week come from AM, Motor Trader, Motor Finance, Car Dealer, Auto Retail Agenda, and Business Vans. So as you can tell already, we've got a lot of stories this week, starting with new car sales rise 1% in September plate change as retail demand continues to fall. Van sales continue to rally, but EV demand remains low. Carwow acquires Gridserve Car Leasing in a move to accelerate its online leasing operations. Price drops and improved supply are not enough to convince buyers to switch to used EVs, reports JudgeService. And finally this week, we'll finish off with the latest 2023 full-year results from Big Motoring World, Chorley Group, Glyn Hopkin, JCB Medway, and we'll also look at Motorpoint's H1 results for 2024.
You're listening to all the chatter that matters on the Motor Trade Radio podcast. If you're a supplier and would like us to profile your business and reach our audience of dealer bosses, managers and decision makers on one of our dedicated supplier specials episodes, get in touch with Curtis and Philip at motortraderadio@yahoo.com.
And just to recap, companies already featured in our supplier specials include CheckFic, AutoChat and Jigcar. So if you'd like us to profile your business, then just get in touch with Philip or myself. We're both on LinkedIn.
So over to the headlines, and a little bit later because we wanted to sort of cover this in a little bit more detail. And as Curtis said right at the start of the show last week, we had some big headlines to cover off. So SMMT figures are out, and as Curtis said there, you know, the figures are both optimistic and disappointing in many ways. So the month finished off at 275,239 registrations. That was a 1% year-on-year increase. And that took the year to date up to 1.514 million, and that equates to a 4.3% year on year increase for the same period. But disappointing, as Curtis mentioned there, private registrations for the month dropped by 1.8% year on year, whilst fleet again continues to support the growth with a rise of 3.7%. But apart from that, Curtis, there's a bit of a little bit of sort of detail behind all this of what's been happening in that EV space, and the fact that the rise of 1% to 275,000 is a reasonably good performance. We could put it in context. The average September between the year 2000 and 2019 is 364,000 registrations. So still a significant downturn from pre-pandemic levels.
Yeah, it's about 20% down on those pre-pandemic levels, and there's certainly a lot to unpick from this story that we're covering from AM. And you've already highlighted EV uptake. So EV uptake among private buyers remains weak. No big surprise there. But having said that, it was a plate change month. There are a lot of incentives in the market. But the report shows that EV sales rose 3.6%, but that translated to only 410 additional registrations, and that is despite that heavy discounting. So the year-to-date figure shows private EV demand is down 6.3%. Even so, the EV market did hit a new high. So there's some real contrast within this story. So EV registrations overall increased by 24%, with over 56,000 units sold in September, achieving a market share of 20.5%, which is pretty much in line with where it needs to be for the ZEV mandate. But it's driven by fleets. I mean, we can see the figures, how the breakdown has actually panned out in terms of fleet. Took a market share of 54.2% compared with private, which was 43% for the month. Fleet was up 3.7%, and as you said, private was down 2%. So we can see where that demand is coming from, and it's been the case throughout the year.
Yeah, and I did read somewhere that I think the September number of EV registration is actually higher than the whole of 2019. EV registration. Yeah. So, I think there's some optimism there. I think the big question is where these vehicles are being registered. The financial cost of these registrations, I think, is probably a key question behind this, because as you allude to there, there's some massive, significant incentives on the table. But I mean, the headline, does say all, doesn't it? The car makers spending $2 billion to save stall in EV market, and that's the warning from the SMMT with Mike Hawes there. It's the cost of this that is the big question, isn't it?
Yeah, and it's not sustainable, that sort of level of support. And within the story, he once again is calling upon the government to introduce incentives just to make that transition to EVs easier than it is for a lot of retail buyers. And that's messaging that he's been consistent with throughout this year and indeed most of last year. So the fight goes on. What particularly interested me in this story, and I do urge you to look at AM's coverage, is they've got an A to Z listing of all the brands and how they did in September. Now, clearly, we're not going to read them all out, but it is quite interesting because they've actually listed them in terms of brands with the top registrations, and it was actually led this month by Volkswagen, followed by Kia, Audi, Toyota, and Mercedes-Benz. And what particularly stood out for me was that Ford, who would typically, I mean, back in the day, they would always be number one. And in more recent years, there'd be one or two. But Ford was actually in sixth place with registrations down 23% year on year, while Vauxhall, traditionally the number two player in the market, was actually the 12th bestseller. So, it's really dropping down the rankings now. They used to be 1 and 2.
Yeah, no, I mean, that as you say there, I mean, it is always, I mean, one of the first things you do when the SMMT figures come out is have a look at that, because it kind of tells the real story from the OEMs of who is pushing hard, who are pulling back a little bit, who have got a few challenges in the marketplace. And I know from market sentiment, some challenges across the BMW Mini network with some recalls and delivery stops taking place at the minute. Which that has impacted their registrations in the month of September, but positively, that will give them a bit of an overflow into October when they start to get through those delivery stops and recalls. But like you say there, that really, to your point there, you'd see Ford, wouldn't you? Your Vauxhalls, your Fords, those big volume players, and then you'd see like the BMW Mini, Audi, all in that kind of 6, 7, 8% market share. But a lot of shifts at the minute, clearly taking place of between the manufacturers. But also within the story, they do highlight the top models for both September and the year to date. And interestingly, for the year to date, the Ford Puma is still number one, just marginally ahead of the Kia Sportage, and that's just ahead of the Nissan Qashqai, Curtis.
Yeah, and the Kia Sportage, I think the race is on now for the Kia to end the year as the best-selling car. I mean, the best-selling car for September with 7,500 units sold. So, strong performance there. And I did notice that Kia took to promoting that quite heavily in their PR output over the last week or so. So, clearly very pleased to be there in the top position.
And I think we've got a bit of a debut for the next story from Business Vans, who have shared the market on the September registrations for the LCVs, which we don't necessarily get that great a coverage on.
No, so Business Vans, it's part of Motor Trade News. So the story actually appeared on the homepage of Motor Trade News. You click on it and you go to Business Vans, one of their associated titles. So the headline there is Sliding EV Sales Dent Positive Van Market. So this highlights that the van market grew by 8.3% in September. So a very strong showing there. And I think that's the second month in a row that van registrations have increased. The story goes on to say fueled very much by the plate change. And it actually produced the largest January to September volume since those pre-COVID years, pre-COVID year of 2019. So, a good, encouraging and strong market for vans, but the downside is very much EV uptake, because battery electric vans units registered were just over 3,000, represented a fall of 0.5%, and that's the fourth successive month of sliding EV sales at a time when clearly they need to be growing exponentially.
Yeah, and within the report, they say, I always urge you to go and have a look at the data on this year to date 4x4s, which are the trucks that sit within the LCV sector, seem to be challenged a little bit, down 2.4% year to date, but 42.4% in the month of September. Now, these are big percentages based on fairly low volumes, but the sub 2-ton van market saw a rise of 39.1%, and that was up from 4,500 back in 2023 to just over 6,000 year to date in 2024. So starting to see a bit of the shifts of where that market is. And to your point, some of that will be because of the EV element sitting behind some of those LCVs that sit within the the sector there.
So moving on to the next story from Motor Finance, and the headline there is Carwow acquires Gridserve Leasing to enhance car leasing comparison engine. Quite a long headline there.
It's switching into the Daily Mail world, that one, isn't it?
Yeah, exactly. Yeah. So, but it does tell the story. So, Carwow Group has acquired Gridserve Car Leasing from Gridserve. So, Gridserve, the recharging company, continues, and I'm guessing will focus more on its core business of rolling out charging points across the UK. But the move is part of what Carwow says is its strategy to rapidly accelerate in the online car changing marketplace. I thought that was a typo, but it's not. It is actually car changing marketplace, and with a focus very much on leasing. Now, Carwow already has leasing options on its website, but by acquiring the Gridserve operation there, can now operate some of its own leasing business rather than being totally dependent on other providers. So an interesting move here.
Yeah, it is. Yeah, and the Carwow Group CEO does comment saying that bringing the Gridserve Car Leasing into the fold will enable them to develop a range of exciting new product experiences for those that are looking to lease their next new car. But again, it does highlight here that the expansion that you referred to there, Curtis, is expected to take place later in the fourth quarter of this year, and that coincides with the launch of a new brand name and visual identity for the leasing operation. So it looks like this is the start of something a lot bigger starting to take place there.
Yeah, definitely. And I'm sure we'll return to this story once that happens. We'll be back after the break with more headlines.
You're listening to all the chatter that matters on Motor Trade Radio. Powered by Motors, the driving force behind multi-site advertising. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media, available on demand, wherever you are on your podcast feed.
So next headline is from Motor Trader, and the headline there is price drops not enough to convince used car buyers to switch to EVs. So this is based on the latest research from JudgeService, which is part of their State of the Nation research of just over 5,700 buyers, and we've been reporting on various outputs from this research over recent weeks. So this one looks specifically at the appeal of used EVs to car buyers, and it found that just over half are not considering purchasing a used EV, and only 1 in 5 said they would. Neil Adley, MD of JudgeService, said that there's no getting away from the fact that used EVs are a tough sell for many dealers. This is not helped by the perception among consumers that prices are still too high. And this is very much the nub of the question in this one, because as you and I know, Phil, the prices of used EVs have been coming down quite dramatically over the last 12, 18 months. And we talk to Darren Martin every month about this, but the message isn't necessarily getting across to the end consumers who think that it's still too high.
No, you're right. And I think, generally as you say there, we've seen sort of 18, 24 months of continual falls in EVs. I think when we catch up with Darren at the end of this month, that story might have changed slightly, because we are now starting to see a little bit of an uplift in some of the EV values, because now they are at a point that they do offer such a fantastic value to the consumer. But to your point, that message doesn't seem to be getting across clearly enough to the consumer. You can get iPaces now that you can retail, for sub £20,000. for a used Jaguar I-Pace. You can get Teslas now that change hand for between £10,000 and £14,000 in the trade. And some of those offer fantastic value to the consumer that has the either the domestic or destination charge in, or that driving, that it will suit them, but it's not getting across strong enough to the consumer that these vehicles are offering fantastic value for the right customer.
Yeah, definitely. And the research, which I did see, because I did help the guys with this press release, actually looks at some of the demographics behind this, and it found that older buyers were the most reluctant to buy used EVs. More than half of those aged over 56 said they would not consider one, whilst the group most likely to consider buying a used EV was that younger age band between 26 and 35. So, a lot of interesting data within this story. So do urge you to head over to Motor Trader to see the full report.
Telling a bit of a story there, isn't it, about the attitude towards new technology a little bit, possibly. But just finally now, we've got a few financial updates. They seem to be coming through thick and fast now, don't they, Curtis, for
they do indeed.
Full year 2023, or even now we're starting to just see those Q1 and half year trading now starting to come out. But we've got a few of them. And the first one, we're heading over to Car Dealer. And that is about the big motoring world post slashed profits in the last full year, and highlighting that some of the challenges that the business faced through 2023, but saying that the real their accounts heavily reduced 2.24 profit for 2023. But there's a little bit more in this, isn't there? And when they posted and where Car Dealer got these the figures from.
Yeah, I mean, it's a story within a story, because the results, the full year results, had not been posted on the company's house website. Car Dealer had access to the results, and actually have comments from Lawrence Vaughan, the chairman of Big Motoring World, about the results. So apparently, it's the results are going up, and they may be up by now, but within the story, it does actually point out that that the profits are down 79.5% on the previous year, when the company made a profit of just shy of £11 million. The group generated 697.4 million in revenue over the course of last year, that full year, up from 529.6 million in 2022, with the vast majority, 650 million, coming from the sale of vehicles. And this really does parallel a lot of the stories we've been talking about in recent weeks, where you're making that comparison between 2023 and 2022. Now, those of us who can remember back to 2022, it was a golden year.
It was an exceptional year.
Yeah, it really was. And comparing like for like is very difficult. 2022 was that year coming out of the pandemic, when big demand for used vehicles, certainly, and indeed new, and that was reflected in the profits that a lot of the dealer groups and car supermarkets reported in 2022. So we're not comparing like for like, and certainly within the Big Motoring World story, it does highlight that some of the additional turnover was the result of opening not one but 3 new sites in the period. So that was sites in Wimbledon, Leeds and Cannock.
Yeah, like you say, it's very difficult at the minute looking at those 2023 numbers, isn't it? Generally, because there is a theme around profitability and revenue at the minute. But moving on to auto retail agenda, they've covered the quick couple of quick updates, and Curtis mentioned them earlier with Glyn Hopkin and JCB Medway. Saying that Glyn Hopkin in the year ending again December 2023 saw profit before tax fall from 7.5 million to 4 million, but turnover again grew from 520 million to 560 million. But obviously a little bit from the directors saying that they were pleased with the result, as 2022 was an abnormal year, both for the group and the UK auto retail in general, obviously due to the demand outstripping supply, which is kind of what we've been sort of saying throughout these, isn't it?
Yeah, definitely. And the link story that accompanies that is from JCB Medway, who based in Gillingham, Kent, representing a lot of the VW Group brands as well as Renault and Honda across Kent and Sussex. So they reported a strong full year to the end of December. Profit before tax was up from 4.4 million to 6.6 million, and turnover grew from 228 million to 256 million. So, yeah, very much bucking those trends that we've outlined. And the directors rightly describing the results as excellent. They added that for used cars, 2023 was a year of two halves, which is quite interesting. The second half was dominated by and this is quoted, the disastrous situation with used BEVs, which plummeted in price, some by up to 30%. So, a remarkable achievement with those sort of headwinds for JCB.
Yeah, definitely on that one. And returning to car dealer, another set of results out from Chorley Group, posted a record turnover, but again sees revenue swing to 983,000 pre-tax loss in 2023, saying that the family-run firm sees profits swing, as I say there, to 983,000 loss. Fall in used car values and high interest rates are blamed for that swing. And saying despite that, the company posted record turnover despite the showrooms being shut. And directors, again, similar vein, that remain positive and state the business will return to profit in 2024. So similar to what we've just mentioned on those last stories there, that, 2022 was abnormal or exceptional year, and 2023 was a little bit more challenging on the bounce back off that year, but still a little bit of optimism for 2024.
Yes, speaking of which, heading over to Motor Trader, and the headline there is Motorpoint returns to profitability in first half. So this is particularly interesting because we're now starting to see some of those interims for this year, for the 2024. So this is Motorpoint return to profitability in the first half of this year. And in a trading update, it said that H1 pre-tax profits are expected to be in the region of £2 million, in sharp contrast to the £3.7 million loss last time, so 12 months ago. The supermarket chain saw retail volumes grow 17% during that first half, and was seeing strong momentum going into the second half of the year, with its 21st store set to open next month. And it added that used car prices and margins remained broadly stable, and customer sentiment had actually improved, but the supply of used vehicles remained subdued, particularly at the newer end of the market. So no big surprise there, because they're the cars that pretty much everyone wants to get hold of.
Exactly. And a very brief comment there from Matt Carpenter, who's the CEO there at Motorpoint, saying that the resilience of Motorpoint business model has been proven once again, and that they're delighted to confirm that the successful execution of their brilliant basics program, brilliant basics program during full year 2024, alongside the easing of the macroeconomic pressures, has resulted in a return to profitability. So again, demonstrating there that, putting some focus in, putting some sort of processes in place that they implemented through the year is sort of showing the results there. So very brief and focused comment there from Mark, as always. But yeah, we covered quite a few headlines there, and lots going on. I think we're clearly now getting to the point where we'll start to see some more sort of profitability performance results for 2024, rather than looking too far back for 2023 there. But clearly we're now heading into very much into that fourth quarter, and I would say that the year for new car registrations is probably now written for what we are going to achieve, and a lot of focus now on what happens next in 2025, and more importantly, what's going to come out of the budget on the 30th of October, Curtis, as we look forward to that one.
Yeah, most definitely. But that's all we've got time for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors, the driving force behind multi-site advertising. We'll be sharing all the URLs from this week's headlines on Monday morning. To make sure you receive them, just subscribe to the free newsletter on our LinkedIn page. Just search Motor Trade Radio Podcast.